Hi guys, welcome back to the NZDayTrading101 channel. I'm Shami, and today I'm just gonna talk to you a little about something. It's an important topic, and it's something that a lot of us find hard to do, and it's how to take a loss. So we've all been through losses, and would have made a loss, and it kind of downs our motivation. So I'm just gonna show you guys today, like, what's the best way to take a loss, and don't see it as a loss for starters. So um, number one is, if you take a loss, don't be sad, control your emotions, cut your losses early, and you're supposed to learn from your loss. So basically, let's say you made like a three, $400 loss, learn from it. So mentally in your mind, don't see it as a financial loss. See it as okay, I made a mistake, or where could I have gone right, or what can I do better next time? So this is quite important to like log your trades down. So basically, just write your trade down. Be like, all right, I lost $400. What did I do wrong here? What was not looking right? Was I feeling? How was I feeling in the trade? Was I feeling confident? Was I feeling a bit, not confident? Maybe I shouldn't enter this trade. So these sort of things, if you compile them into reasons why you shouldn't have took that trade or what you could have done better next time, you'll know for next time. So basically, all right, the same sort of trade comes up, you'll be like, all right, so last time I had the similar sort of trade, similar sort of pattern, everything was similar, but I took this trade and I lost money. All right, I'm seeing this trade again, and last time I did this, I'm not going to do that. And maybe I should wait until there's like a breakout, or maybe wait till the resistance is broken. So this is all in line with like your strategies as well. So if you're trying to make a trade strategy, make sure that you test it first. So the NZX virtual trading account is perfect for testing your strategy. So if you trading a particular type of stock, like stocks between $1 and $5, and they usually break out when it goes over this level or stuff like that, note them down. And again, like if you are using real money, you do take losses. Don't let losses demotivate you. You can make money in the NZ market. I mean, it's just all about how you perceive your. Can you stick to a plan? Can you cut losses quick? Can you learn from your losses? And it's all about just fear and greed. You don't want to be too greedy, and you don't want to be too fearful either. So it's all about getting those right entries and just managing your risk. So again, guys, like the thing is, like, we're professional risk managers. We're not stock traders. So stock trading is just a term, or day trading is just a term. The real term, the underlying term for us, is we're professional risk managers. So stocks are our instruments, and we're just managing our risk around them. We're looking for risk reward ratios, like risking 10 cents to make 40 cents. So 1 to 4 risk reward ratio. Yeah. So I'm just going to take you around about just going to take you for a loss I made last year, October or something, and the stock was Sky City. So if you just look here, so I've just opened a trade here, and yeah, so there we go. So sorry, it wasn't Sky City, yes, Sky Television, I think it is. So basically, when I trade the stock, so as per my game plan, I had a lot of volume behind it. Everything was going well, but the stock didn't move higher. As you can see, I got in at around 91 cents. But same day I sold, so 11. So I had to sell, same day. So that's basically day trading. So day trading is when you sell within the same day. If you're holding for a day or more, it's called swing trading. So yeah, so I got in at 91 cents, and I had to sell at 89 cents. And the reason for that was it just would not continue higher. So it could have been anything back then. I can't necessarily remember now, but sometimes stocks do not move up, and you do take losses. So the thing is, like with this trade, when I had to review it, um, going back to this trade, so what happened was there was a bit of resistance ahead at 93, so it formed quite quick, and I just had to take a loss. So, and it is what it is. Like, I learned from it. So maybe, with Sky Television, maybe the market cap's, uh, maybe it's just too big or something. So these are sort of the reasons I'll compile around the trade. I'll be like, all right, maybe I used too many shares. Maybe it was harder for me to get out. Um, Maybe I shouldn't have been in this trade in the first place. And yeah, so in the end, I just had to take a bit of a loss. So from here, you can see like, what, 240. two, like nearly $300 loss or something like that. That's okay. Like the thing is, I learned from it. So I learned that maybe I shouldn't be getting into Sky Television stock because it's a stock that just doesn't move higher. And some stocks that do behave in different ways. So some stocks will tend to explode higher, some stocks don't. So this one, Sky Television, I think it had like a long-term downtrend, and that's kind of like the reason why maybe I was trading. I was going for that $1 mark. So my target was I think $1, but as the trade started to form, resistance started to build, and it was just you kind of know that it's just not going to continue to go higher. So you kind of just have to cut your losses. With this one as well, like so I was looking to get out at 90 cents, but obviously sometimes the price drops a little bit faster than expected, but I did a limit order down to 89, so I didn't get out at 90 cents, but I got out 89, so it was supposed to be like a $200 loss, but it turns into a $300 loss, but that's okay. The thing is, in time, uh, my ratio for wins and losses will get better because you start to learn more. Like with me, I've started to do more and more trades. I start to know what works and what doesn't. Cutting your losses quick. As long as you can take these little losses, then those big ones will come to you. And like the whole, you want to have like a 1-to-4 risk reward ratio. So basically, one win or one like you those home runs will come those home runs will come and clear out all your losses, and then that's how it starts. Like you just slowly build your way up. You're just kind of getting in and out of trades, and eventually you'll start to get the gist of how your strategy works and how you want to apply it to the market. So yeah, so that's a little bit today on losses and how to take them. So remember, guys, a loss is not a loss. Take it as a learning lesson. I know sometimes it can be an expensive learning lesson, but it's just how we perceive it. So mentally, we need to perceive it as a learning lesson. We need to go back and see what we did wrong and make sure that when the same sort of thing comes up next time, uh, we'll just learn from the previous time and just not do that again. So yeah. So thanks for listening to this video. Like always, please hit the like button below, and also subscribe to my channel and turn on alerts. And I'll see you guys on the next video.